Hi, this is Antoine Harris with Platinum Bridge Wealth Strategies, and we've had a tough year so far, and the last couple of weeks have been especially challenging for investors. I wanted to give you some perspective. The selling that we're seeing has been very broad and it's been indiscriminate. So stocks and bonds simultaneously in every market around the world, including investments from each sector of the economy. So when we see this kind of broad-based selling, a lot of this is algorithmic. It's happening with computers that are selling at certain points when markets reach certain levels. Also for individual investors, it's very fear-based. So this is normal. It happens periodically. We just need to have a game plan and a perspective for dealing with this kind of volatility going forward. I want to give you some perspective on volatility in the stock market and how it's played out over time. So this chart shows the volatility of the market. It shows the low point for the year in orange, and it shows where the market ended up that year in blue. So for example, 2003, the market was down 14% at the low point, but it ended the year up 26%. 2008, the market was down 49%. It still ended up down 38%. But as you can see, it's very normal for the market to hit a low point, to have a bad part of the year and still end up in positive territory. This is 2009, 2010, 2011 was down 19% at one point. It ended up flat. I just wanted to show this to you to give you some perspective. Now, I have no idea where we're going to end up in 2022, but the fact that we're experiencing this kind of volatility, things can certainly change by the end of the year. If they don't change, this gives you an historic perspective on bear markets over time. A bear market is defined as 20% down from the peak. So the average bear market going back to 1942 lasts about 11 months, a little more than 11 months. The average loss during a bear market is down 32%. That's painful. It hurts. The average bull market lasts about almost 4.5 years, and the average return is up 154%. So what does that mean? So the bear markets are normal. They happen periodically. It kind of resets the valuations in the market. It gives an opportunity to put more money to work. It's tough going through it. But from this perspective, the bear markets are relatively short and the down market is much lower than the upside that's experienced during bull markets. So I think this helps. This goes back to 1942. You can see these bull markets in blue and these bear markets in orange. So we haven't quite hit a bear market for the S&P 500 as of yet. If we continue to have this volatility, we may go into bear territory. It's tough going through it, but it's a normal part of market cycles. The best thing to do is to maintain the longer term focus. Anything that needs to happen in these portfolios we've discussed, we put the money that you need aside. We put in some buffers to help navigate volatility like this. And we just have to maintain the proper perspective given what we're seeing right now. This also gives a long-term perspective. This is the S&P 500, the broad market. The broad market, it's going back to 1926 through 2021. It's had 71 positive years and 25 negative years. The market is up 74% of the time. I like those odds. As I mentioned, the market has a very strong upward bias. It's important for us to maintain our perspective when we're having periods of volatility like we're seeing now. This is also very important. Since 1937, when you have a 5-year horizon, there's over 92% probability of achieving a positive return. When you have a 10-year horizon, there's a 97.3% probability of having a positive return for your investment for the S&P 500. And when you get out to 15, 20 years, it's 100%. So that's why it's so important to have the game plan, to have the financial plan in place. The money that you need before these longer term thresholds, we need to have in less risky investments, which we do, than the money that's earmarked for longer term growth. We want to keep that long-term perspective, and the odds are heavily in your favor for positive returns over time. I hope that information is helpful. As I said, periods like this are very challenging. If you start to have too narrow a perspective, you can make yourself nervous and you can start making mistakes. So the most important thing to do is to revisit the game plan that we have in place and to make sure that you're keeping a longer perspective on this volatility and the performance of stocks over time. I hope this is helpful. If you have any questions, if you'd like to chat about your specific plan, I'll be happy to set an appointment with you. This is Antoine Harris with Platinum Bridge Wealth Strategies, and I'll talk to you soon.